If you follow business and investing news, you know that sustainable investing and ESG have been dominating headlines this year. From January through July, American investors poured a record $20.9 billion into sustainable mutual funds and ETFs, beating last year's record in half the time. And globally, there's over $34 trillion invested using sustainable criteria, 12 trillion in the US and counting. So what's driving this growth? Well, on September 23rd, this study revealed something pretty exciting. Americans aren't just investing to drive societal and environmental change. They're also shifting purely for higher returns. And this is fantastic news for all of us. Investors can finally see the link between social and environmental practices and a company's financial performance. Now, investors are heavily focused on climate change. In the study, they rated environmental impact as being very important for a company to deliver positive returns. What's incredible is how many social practices are now considered very important. Impact on communities and society, treatment of employees, the gender pay gap, diversity, and inclusion. For investors, the global pandemic and the ongoing struggle for racial justice and equality have shone a light on the link between corporate leaders and laggards and their financial performance. And that's great news for all of us, because a dollar invested in a good corporate citizen is a dollar deprived from a company that, well, isn't. So whether investors are motivated to drive change on the issues they care about or purely by higher returns, this massive change in where capital goes benefits all of us. When we invest sustainably, we invest in a better future. And I think we can all agree that that's something we all want.